Economic data yesterday out of Japan, but not only, from all over the world, as well as from comments by policymakers suggesting that they are not prepared to do much more to avert the economic and financial crisis. Especially Japan has said that it's not urgent for them to introduce a new fiscal stimulus package, which is, I'm sorry, but it is a ridiculous comment since the economy, I think, will contract by 4% this year. As a result, risk aversion dominates, and we are seeing steep declines in currencies across our region.
So it's Rebecca in London here. Where does that leave us if you believe that these policymakers in government aren't willing to go the extra mile? Does that mean that this downturn could only get worse in the next few weeks?
Unfortunately, such stance of policymakers means that the recession will have to play itself pretty much on its own globally, with only marginal support from various fiscal stimulus measures as well as financial bailout plans. And therefore, we will need to wait until Q4 probably for the US to start a recovery, and most likely until 2010 for the rest of the world to follow in a convincing manner. And therefore, the risk aversion trades that we have seen recently are probably going to continue to make money, with the dollar being the strongest currency and most other majors as well as emerging market units declining.
Derek, if everyone's following this risk aversion trade, how do you make money in that sense?
I think it's pretty clear that you need to continue selling equity markets, I believe another 10% down for major indices, as well as commodities, corporate credit, and emerging market assets, currencies and sovereign debt. At the same time, I think that treasuries are quite attractive, although a little bit up already from the lows a few weeks ago. 10-year yield definitely going to at least 2.5, 2-year yield 0.75. Gold, I think, is a little bit too pricey given that the dollar is rising, so I don't think that gold is the best trade. But buying the greenback, especially against the euro, is a good idea, and I think that euro-dollar is falling to 1.20 by the end of the first quarter.
But does that mean that you see much more trouble ahead for the euro region then, if you believe that euro is going to fall against the dollar? Are we going to see a big downturn to come here?
The euro is being plagued by several problems. First, the core Eurozone economies are plunging very deeply into recession, and policymakers here are even more behind the curve than in the United States. Second, peripheral European countries are having increasing problems. And third, Western Europe is exposed to Eastern Europe and the former Soviet Union countries who are having huge troubles, and this means a lot of downside for Western European banks. So on all these accounts, euro looks really vulnerable.
Derek, thank you so much for joining us. Derek Kowalczyk, Chief Investment Strategist at SJS.